Hi there! It's time to use Wyckoff method to help us understand where Polygon is heading, where it is at, and what to expect like in the daily and weekly time frame. So if you're new to my sessions, here are the 3 key takeaways you can expect. Let's start with the weekly chart. So first things first, Polygon has dropped just today outside of the last key level of 15 cents. Beyond this point, there is no reference, especially if you're looking at the Polygon chart. So you may have a question, where do I get this 0.095 level? Okay, it is not from here. It is actually from the MATIC chart. The original or the old Polygon chart that still exists today, but discontinued after the end of October. So from here, you see I've drawn 3 yellow dashed lines. The first 2, the current price has already fallen below those 2. This is almost the last resort before Polygon fully retraced to the level prior to 2021. So that's not something we hope to see. And you see this line that's showing 0.095 over here. If I zoom in, you see where these 3 levels are coming from. Alright? Right before Polygon climbed from its pre-2021 average to the new levels, there were some intermediate like open and close levels over here over the course of those 3 to 5 weeks time. That's where I get those levels. Alright, that's where the trading paused at around this level, meaning change of hands to different investors or speculators or whales, whoever you want them to be. So going back to the original or the new Polygon chart and get back to the 0.095 level. That's where we get it. And that's why we need it now. Because previously, you may be asking, there's no way it's going to fall below the October 10th level, right? And last week and just this week, it has proven that we actually need an additional reference beyond the October 10th level, or where the selling climax was back in April. So the Wyckoff stage that we're still seeing, or like still evolving right now, is another test, or we can call that a spring, and we're not seeing any signs of stopping yet, because the volume last week was higher than the previous weeks, so that selling means something. We hope this week, with this red candlestick to start with, the remaining 6 days and 5 hours, we hope the volume to come down. At least somewhere, like the last week of October. Not like the previous 2 weeks. Because if it continues to look like, especially last week, because the week before, even though the volume was high, it was actually some buying from the bottom when the price hits the red key level of 15 cents. Okay, that was actually a kind of a good sign. But last week was actually not. Okay, it's a lot of volume combined with a bigger price drop. And now this week, if it repeats, that's exactly the trend that's heading towards the 0.095. Okay, however, if the volume comes down and it eventually stops somewhere between this 0.095 and 0.15 and recovers from there, this next sign of SRAM is something we hope to see. At least for the price to come back, pass through the orange key level of 20 cents and go test the 28 cents level. There may be multiple rounds, meaning it can bounce between the red and yellow for a couple of times before it actually goes to the next distribution cycle. depending on how the macro environment is like. So it's time to get to the daily chart. This can be removed. This was when we were expecting would it bounce back from that point. No, it hasn't. And it actually started a new downtrend. So that was September. And all the way until now, we're still within this downtrend. And previously I shared that by the end of the month, this is actually a chance that Polygon can escape from this downtrend. But unfortunately today, you see this wick from above the red key level. There was quite a bit of selling right there. Okay, and the price opened at the key level, tried above, got rejected, and now it has dropped even further. If it successfully climbs back and trade within this triangle once again, that chance remains there. Okay, and we're not too far from that point, just a little bit more than a week from that point. However, if it really comes to test this 0.95 level, it's only by December there is a bigger chance. Okay, it can break out earlier if good news comes in quicker, but if it doesn't, if it continues to trade downwards, we have to wait till near the year end in order for us to see that breakout chance to come. Okay, let me drag this box even further. So the good side of it, like, let's look at it more from a more positive sense, that it's trading on the stronger side, meaning the upper side of the box, of the channel box, okay, instead of the lower side. Because if it's trading at the lower side, it's going to take more strength and more support to first go back to the upside and push us back up. So from the daily perspective, this is continuing to seek the lowest point of this accumulation cycle. While that may be the selling climax already, because that's somewhere it happened along the same line, exactly along the same line, the yellow dash line, back in June, we are at a deep seeking stage. Alright? Yep, the journey may not be very pleasant. It's something that looks like it's even more worse than 2022-2023 crypto winter. But it is where it is, and let's hope the projects that with solid deliverables and healthy adoption will continue and successfully sail past this second winter for crypto, especially